Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
The markets appear to be at some kind of stalemate. What's going on there?
Well, I think we probably talked about it in I know I certainly covered it in my letter, but as we moved into the end of January into February, we were at this technical juncture. It was like a turn point for everything. And it was kind of centered around the dollar. In the background of this, this window, we had the dollar trying to bottom and along with bonds. And we had the market trying to peak. We had, when I say the market, equities, commodities, gold, everything else was trying to peak. So we were at this cyclical juncture, if you will. And we got the initial crack, obviously. January 26th was the high on the industrials, and then we broke down into the February 9th low. And then we rebounded into as of this interview, the high for that rebound was February 27th. And we sit between those 2 points. And so even from a Dow theory perspective, the old Dow theorists used to say when the market was between two previous secondary high and low points, it's of no forecasting. It's giving no forecasting information. It's just, it's literally, like you said, kind of a stalemate. Now, the structure as we sit here is quite negative. The market is on thin ice here if this structure is not mended. And that's the question. I mean, that's the crystal ball question. All you can do is read the structure. The structure at this point is dicey for the market. Thin ice, however you want to say it. Can it be mended? I don't know. If it's not, then, and this structure bites with the next leg down, then, things are going to begin to change with equities. I've been thinking that there was still another, high left in this market, but we need to see what the resolution of this stalemate yields first. And then, it could be that something more is going on. And, I think to say either way until we see a little more technical data as far as the structure of the market. The stalemate, we have to see this stalemate. It's like a tug of war at this technical juncture is going on. Does the bull win or does the bear win? I don't know, but when we see the cyclical implications of it, we'll have that answer, and then that'll give us what we need to know as far as, do we have a higher degree top? If it does fail here, when is the next low due? What can we expect? It'll give us that kind of data. But right now, as you said, it is kind of limbo land. But it's not just, if I could go on, it's not just with equities, it's with everything. Like I said, I mentioned the same thing as far as that turn point with commodities. And if you look at the CRB index, which is a basket of commodities, it's the same thing. We had a high is January the 25th and a low on February the 9th. And then in this case, we did have a high on February 26th. It was a secondary high, and then a slightly higher high on March the 6th. And so we have the same structure. So the other point I want to make here is that equities and commodities have a very, very similar structure here in that they are trying to turn down, out of, the turn point that we saw back in January. And then if you look even at crude oil, which makes sense because it's part of the CRB, but you had a January 25th high, a February 9th low, and a February 26th high. And then we sit in between those 2 points. The exact same thing with equity. So the structure is pretty much exactly the same. And then one more without boring you to death, but gold, it's the same thing. We had a January 25th high. We had a February 8th low in this case. And then we had a slightly lower low on March the 1st. And then here we sit between the 2 points. With commodities and gold and crude oil,
Tim, can we talk about...
I think the resolution is apt to be to the downside.
Tim, can we talk about those after the break?
Sure.
Okay, we'll have more on gold coming up right after this.
I'm sorry, I didn't mean to ramble.
No, it's okay. It's just I need to get the commercial breaks in, and I was thinking today, because I haven't had a chance to look at any business news, because I just got back from the eye doctor. Mm-hmm. I don't know what's going on.
Okay.
So I have to ask you.
Okay, well, I haven't seen any news either. I didn't get up to an hour ago. I was up all night.
Well, I didn't get any sleep yesterday because I was so worried about my eyes.
Oh, I can imagine.
Yeah.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what do you see happening with gold with the markets just churning around right now?
You know, I still think that the 9-year cycle low, until we get to this next intermediate term cycle low, I still stand that odds favor the 9-year cycle low still being ahead in gold, which means there's a washout into that low in the next 60 days. If we do not see that, then pure and simple, it's going to force. It's kind of a square peg in a round hole thing, but it is what it is. It's going to force that 15 low as having been a 9-year cycle low. And some people, like we talked about this before, some people might say, I knew it, I told you so, whatever. Well, you know, if that's the case, like I said, it's the weirdest 9-year cycle low in that it fell far short of the normal cyclical count, but it's also the weakest. So that is not a good thing. The most bullish thing that could happen to gold is for it to wash out into the 9-year cycle low. If that was a 9-year cycle low, look at the performance of gold stocks, and it's pathetic, in a word. So, you know, I maintain that ideally, I hope that the 9-year cycle low is still ahead, because that would set gold up nicely, you know, for the anticipated advance out of the 9-year cycle low. With commodities, you know, I feel like that the evidence it definitely leans toward, in the CRB there is a 3-year cycle top, and it definitely leans toward, I don't have hard structural evidence yet, but the evidence that I have looking at, you know, the oscillator behavior and the cyclical counts and that sort of thing, it tends to lean toward this being probably that we have seen the 3-year cycle top in the CRB index, but we need to see structure there to prove it, is what I'm saying. And then, you know, with equities, you know, we're at this little stalemate, the tug of war between the bull and the bear is going on. We know that we're dealing with a bubble top, and I guess the question is there that one more push up to conclude it, or could we break here? And then, you know, if we see a primary bearish trend change according to Dow theory, then we got to reconsider that maybe the top is in. But while this tug of war thing is going on, make no mistake about it, you know, the structure here is far more dangerous, I think, than people realize, because the market's just been hovering here. There's no fear. And maybe the surprise is that it does break, but it's definitely on thin ice.
We'll have more with Tim Cyclesman Wood right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, back in November, you said we were seeing some warning signs that the market might have topped. Are we seeing the same kind of signals?
Well, yes, it kind of dovetails together. Back in November, what we were talking about, well, actually it was into December. In November, we lost the markers. We the little DNA markers are common denominators. You have a little checklist. You go, okay, well, what are the common traits at every 4-year cycle top? And you have this little list, and you go, okay, well, you got this one, this one, this one, this one, and this one, and this one, and and there's some combination of all of them at a top, and then you look for the hard structural evidence. It's one thing to have, it's kind of like, it's profiling. It's like looking at a criminal, and you go, okay, well, this guy walks like a criminal, acts like a criminal, dresses like a criminal, got behavior like a criminal, but until he actually commits the criminal act, he's not a criminal. But so you profile, and you go, there's high probability that this market has topped based on these things. And we lost those in November, and then the market ramped up into the part of the blow off phase of this bubble. And then we saw the faint reappearance of those markers in January. And then as we moved into January, we moved into that cyclical turn point. And so as we turned down out of that turn point, we did have the initial markers in place. They're there. They are there. And but the thing is that they're marginal. And because they're marginal, you're like, well, it's just not as clean as I'd like for it to be, as pronounced as I'd like for it to be, but it's there. And so now what we're waiting on is, like I said, we're well, let me back up. Because they were marginal, I fully anticipated another, after this decline, this intermediate term decline that we saw coming out of the turn point, which we fully anticipated, after that decline had run its course, I, at that point, fully anticipated another push up and that there was more left in this, and there may still be. That, like I said, that's the decision point that the market is at right now structurally. But if we get the right structural break here with the cycles, then it could cement the markers that are in place, and it could be that we've seen the top. And that's the decision that the marketplace is at right now. Do we cement those markers, or do we get that one more push up? I mean, either way, I think we're dealing with the makings of this bubble top, and some serious, which was going to have serious implications ahead. And like I said, it's not just with equities. We're seeing it with commodities and everything.
What's this going to do to the value of the U.S. dollar?
Well, believe it or not, like I said, all of this is happening. The turn point that I talked about back in January was occurring with the dollar bottoming. And, the dollar doesn't have the best toehold on that bottom yet, but if that low is not in place, it's very, very close. I mean, it may be with one more little intermediate term retest of the low in a couple of months. But in the big picture, the dollar is making a major bottom. The dominant long-term cycle in the dollar is a 4-year cycle. That 4-year cycle low, we're in the window for that 4-year cycle low to occur. If it's not in place, like I said, I think it'll be in place in the next couple of months with one more intermediate term cycle. But, I guess I'm rambling. I guess overall, splitting hairs, the 4-year cycle low in the dollar and higher prices in the dollar. And I know that's contrary, again, to what everybody is thinking, but that's what the cycles are telling us.
Well, Tim, that's why they call you the cycles man. You go by cycles and you don't pay attention to what's happening in the news.
No, I absolutely do not watch the news. Just, you know, I mean, I don't believe anything I hear anyway, so why bother? But I think the surprise, and we talked about that before, I think the surprise is going to be the bottom in the dollar. And if we, here's what bothers me with that. And, I'm somewhat of a gold bug too. I mean, I get it. I understand that gold, is real money and all the gold arguments. I get it. I understand. And so what bothers me about this 4-year cycle low in the dollar that I see occurring is that it does kind of tend to point toward that odd 9-year cycle low possibly having occurred in 2015. And if we get an advancing dollar out of a 4-year cycle low, that may well set gold up for a very weak 9-year cycle top here. That's not what I want to see. That's not what I wanted to see. It's not what, and at this point, I'm not saying that's what happened. I'm saying we're in that. This is a major technical juncture right here over the next few months with everything. And I'm just saying I can see that happening with gold because of the 4-year cycle low that's occurring in the dollar.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.